And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel. We're here to help take us through the closing bell. It's a global simulcast, or something of that nature. We're joined right now by Scarlet Fu in the TV studio, Carol Massar and Tim Stenovec bringing it up in the radio booth as we welcome our audiences across all of our platforms here. A pretty interesting day ahead of what could potentially be a much more consequential day tomorrow, Carol.
Yeah, and I think that, the Fed is going to be dealing with a lot of conflicting signals. If you look at some of the data points, just the labor market, we have conflicting signals. Having said that, I'm just trying to make sense of what's going on in banks today, because the KBW Bank Index is down a lot. It's down, as I pull it up, about 2% here in the trade, and you've got almost every name showing some declines. And I'm not quite sure, just talking with our Bill Maloney, trying to make some sense of exactly why we're seeing some pressure in the banking sector.
I guess you could say they're down ahead of tomorrow's Fed meeting.
But why?
We don't know. I don't know, Alex, if you're seeing any reason why they're lower, but certainly the worst performing sector in the S&P 500 today, JP Morgan, we see Bank of America, Citi, PNC, all lower on the day today.
Yeah, Capital One losing more than 4%, State Street also losing 4%. There used to be something called a Fed drift, where stocks would rise during the week of FOMC meetings. This is according to Nick Colas of DataTrek, and there was actually a white paper published on this. That happened pretty reliably from 1994 to 2011, but in the past 1.5 years, the drift has largely disappeared. And, you're not seeing much of a rally in the Tuesday to through Thursday period. You only get a gain 45% of the time. So, there's no more lift due to the Fed.
And definitely not in banks. So, Tim, you were asking sort of why? Well, I don't know. I mean, yields are lower. Huntington didn't do well yesterday, lowering its guidance for the year. We're continuing to be worried about central commercial real estate. You take a pick.
All right, we get the closing bells here in New York. A Dow Jones Industrial Average never really gaining any traction on the day, lower by more than 100 points, or about 0.3%. The S&P and the Nasdaq both in the green. You can thank Apple largely for that, particularly for the S&P 500. A 15-point gain on the day, and all of that right now attributable to Apple. 0.3% higher for the S&P, 0.9% higher on the Nasdaq Composite, 0.7% higher on the Nasdaq 100, and your laggard on the day, that is the Russell 2000, lower by roughly 0.4%.
All right, quick check on the S&P 500 to follow off of those closing numbers from Romaine. And you're looking at most names in the S&P, 322 to the downside in the Tuesday trade. Scarlett, you got about 179 gaining ground and 2 unchanged.
And if you look at the sector performances, we only have 2 gainers right now. Tech, and that is largely on the back of Apple. Communication services, Meta, Netflix gaining a little bit here, but REITs have turned negative. And all the other sectors are in the red. Financials, utilities, and industrials lead the way down.
Yeah, a lot of red there. That was not the case, though, for Apple, which didn't do so well yesterday following its big event out there on the West Coast, which, of course, continues throughout the week. But it feels like all of a sudden investors are like, oh, yeah, get it. AI, Apple Intelligence, we get it all. And so we did see this stock pretty much hold on to all of the day's gains. It's finishing with about a 7.3% gain. It was the number one gainer in the S&P 500 and the NASDAQ 100 today. Apple shares hitting a record. So, again, AI for the rest of us. Apparently, investors liked it, and they were piling into that name. We talked about banks being under pressure, but Affirm Holdings actually having a very bullish day, finishing near its highs of the session, up about 11%. At the buy now, pay later company, rising on heavier than normal value. The company said Apple announced that Affirm's payment products are expected to be available to Apple Pay users in the United States later this year. So you had investors moving into that one. And here, something a little bit different. Calivo Growers, CVGW is the ticker, was up 22% at its highs. It's a small market cap, about $474 million, finishing the day with about an 8% gain. It distributes avocados and other produce, posted second quarter profit and sales that topped analysts. I should point out that about 6% of the float is shorted. Stock is still down about 9% year to date, but I don't know. I just thought it was kind of interesting, something different.
I think it's because of all the avocados we're eating in the Stenovec household.
I just want to point out, too, just before you move on, we are awaiting earnings today out of Oracle. We're getting some insight here into their next move here. The headline crossing the Bloomberg terminal right now, Tim, is that Oracle and Google Cloud reporting a multi-cloud partnership. I don't know what that means, but investors seem to like it.
Oh, there we go. Actually, OpenAI is selecting Oracle Cloud Infrastructure. That's going to be that partnership. So OpenAI selects Oracle Cloud to extend the Microsoft Azure platform. Interesting stuff as we wait for those earnings.
Especially given the yesterday's news about Apple and the OpenAI partnership, it seems like a real winner in all of these new partnerships is the one common denominator, OpenAI and Sam Altman. So certainly we'll keep an eye on that. Oracle shares are rising 4% post-market after this announcement. Hey, I do want to get to some decliners before we do get more earnings that we await. Tesla finishing the day down by 1.8%. JP Morgan analysts led by Ryan Brinkman came out with a report that said that even though Tesla will show a robotaxi concept and maybe an accompanying app on August 8th, material revenue generation is unlikely for years to come. Also, shares of JP Morgan Chase falling today. Financial is the worst performer. We've been talking about this throughout the program. Banks in the S&P 500 down more than 2%. JP Morgan, Bank of America, Citi, PNC. This ahead of tomorrow's Fed meeting. Shares of JP Morgan down 2.5%. And Paramount Global shares falling late in the session, just plummeting after the Wall Street Journal reported that Sherry Redstone's National Amusements has decided to stop talks with Skydance. We saw shares fall double digits just in the minutes leading up to the close after the Wall Street Journal reported this, finishing the day down, though, by about 7.9%.
You know, I think, Alex, I'm just going to make a bid here. Why not, right?
Yeah, everybody else is,
I don't think she's going to
right?
like your bid, man.
I don't,
mean,
but
What
what's
I
the
I don't think
worst?
she likes any bid.
a lot of billions. Come on.
Yeah.
What do you? I mean, what are the assets you're interested in?
Oh,
Romaine?
you don't want to see my assets, man.
No. What you're interested in, not what you have.
Thank you.
Hey, look into the bond market for a second.
MTV,
Alex, you're
VH1,
pivoting
Comedy
from that?
Central.
I'm pivoting before we get to Oracle
Okay.
because I feel like we're into the Fed, we're into CPI. I have a countdown clock. I have 16 and a half hours until we get that CPI. You had strong buying pretty much across the curve. You have yields lower. It was there in the morning, and the bid came in even more so at 1 o'clock after you got a 10-year auction. That went really well, as Jay Perry was just telling us. That's unusual into a CPI Fed meeting.
All right, everybody. As we said, we've been watching Oracle shares and, again, continuing to see this one moving higher in the aftermarket, still up about 3.5%. We talked a little bit about this company talking about selecting Oracle Cloud, OpenAI selecting Oracle Cloud to extend its partnership. And now we have Oracle earnings coming out. So Oracle just breaking as we are talking.
All right, let's take a look at the numbers here. Fourth quarter adjusted revenue, $14.3 billion. That is lighter than what analysts had been looking for. They had anticipated revenue of $14.57 billion. In terms of adjusted operating income, $6.67 billion by that metric, slightly better than what had been anticipated. You distill that into the EPS, adjusted EPS of $1.63, trailing the consensus estimate of $1.65. The operating margin for the fourth quarter, 47%. Analysts were looking for 45.5%. So that gain that we saw on the headline about Oracle and Google Cloud partnership, that has now faded, and the stock is down about 1.5% right now.
And looking at some of the segment growth, or rather lack thereof here, a drop in the services revenue down 6%, a drop in hardware revenue down 1% here. And then even when you look at the cloud license and that on-premises license revenue, that was down 15%. Now, I guess the good news is their biggest business, which of course cloud services, that was up 9.2% here. But kind of interesting to see that as they try to transition more to cloud services here, they still are getting some drag here from those legacy businesses.
Safra Catz coming out, the company's CEO, and saying that in the third and fourth quarters, the company signed the largest sales contracts in the history of the company, driven by enormous demand for training AI large language models in Oracle Cloud. And then Oracle chairman and CTO Larry Ellison saying that they've agreed to work together to support OpenAI and ChatGPT, and 11 of the 23 OCI data centers we're building inside Azure went live in the quarter, talking about the multi-cloud cooperation with Microsoft that expanded significantly in the fourth quarter of the year.
Yeah, just to go back to some of the breakdown there, the fourth quarter cloud infrastructure revenue, that was sort of the one everyone was watching, came in at $2 billion. That is a little better than estimated, up 42% in dollar and constant currency. But the question is, is there a demand issue or is there a supply issue, and how is the company managing that? And as Romaine mentioned, sort of the old legacy businesses potentially not living up on that. Also, just to point out, cloud application came in about $3.3 billion, and the overall cloud revenue was at $5.3 billion.
All right, stock's still up about 5% there in the aftermarket, and this the stock is up about 70.5% here in 2024, so building certainly on the year gains. All right, that's a wrap, guys. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. The closing bell. We'll see you again, same time, same place tomorrow.